From the Lineweaver Wealth Watch Center, this is the Financial Quarterback.
I'm David Moss of Fox 8, guest hosting the Financial Quarterback.
And I'm Jim Lineweaver, your financial quarterback since 1993.
Okay, earlier this year, Fitch Ratings downgraded the United States long-term foreign currency issuer, and Moody's downgraded small and mid-sized regional banks, citing financial strains that could hurt their profitability. Okay, I said all that stuff. But what does it mean? There's a lot in that package.
It can be confusing. So when companies or governments issue bonds, investors turn to basically three different types of major rating companies in order to find out, how these bonds should be handled kind of in your portfolio and what to pick. So it's going to be Fitch, Moody's, and Standard & Poor's. And this is going to determine how likely these entities are to default on their debt. So bonds that receive higher ratings from these agencies are considered investment grade and are unlikely to default. These bonds typically pay lower rates than higher riskier bonds, but are considered safer.
Okay, sorting it out. Bonds with below investment grade ratings are known as high yield or junk bonds. In exchange for the heightened risk of default, these debts offer higher yields to entice investors?
They do, right? Because if you have a higher level of risk, the only way you're going to want to purchase that bond is to get paid more money for it. But the U.S. debt is miles away from that kind of territory. So Fitch's downgrade represents a fall from the very peak of the creditworthiness just to one notch below that.
Okay, so let's get to the big question. How will the downgrade impact my finances?
Well, you may see some choppiness in the stock and bond markets, but we're mostly taking this in stride. So the biggest change is that the rates will go up across the board on all sorts of debt to compensate for the added level of additional risk.
So I shouldn't be freaked out here. Nothing dire, no default, no recession?
Big R word? No,
yeah.
Not yet. So whether the Fed's going to be able to slow the economy while avoiding a recession remains to be seen. But this downgrade is a kind of a ding on the U.S. credit rating, if you will, and this does open the door for other strategies to help balance out your portfolio.
So here's a really good idea, folks. Join Jim and his team for a complimentary meal.
Yeah, we have a panel of 4 professionals to discuss wealth planning from every angle. It's going to be financial, tax, legal, and insurance. We're going to discuss this and other strategies to help you outpace inflation and help preserve and protect your wealth for the challenges ahead.
Okay, so join us to learn how to identify the basic steps to protect your portfolio from a possible recession, why 10 of the last 11 Fed rate hike cycles ended in recession, and how to avoid 3 common mistakes in managing retirement income, and much, much more. So join Jim and his team, that complimentary meal at Luca West on October 5th or October 10th in Westlake. There's going to be a dinner or lunch times available, but seating is limited. It's going to fill up quickly, so make sure you call us today or visit lineweaver.net to reserve your seat now. And here we go. Here's Fox News Sunday.